Yeah. Okay, welcome to the Michigan Note Investor Forum meetup. Tonight we have Bill Griesmer from Stonegate Capital, and we're very excited to have you today, Bill. Actually, Bill and I met, I want to say it could be 2018 at a mutual mastermind meeting. You know, we are both in the Midwest here. So Bill's from Ohio, and he is actually the Note Investor subgroup leader for the co-RIA group, which is Columbus RIA and Cincinnati RIA joined. So I was able to speak to his group maybe a couple weeks ago, and so he's returning the favor. So we are recording this, and we're really happy that you're here today, Bill. So your topic is where and how to find notes. And I have to say, this is one of the top questions we get as note investors. Take it away.
Great. Well, thank you so much for having me here, Melanie. Yes, she did a great job speaking to our group. So I'm happy to be with everyone here tonight. And I've got some really good information for you. I'm excited to share. So like Melanie said, tonight I am speaking on where and how to find notes. It's always a big topic that a lot of people ask. And I say, well, it's at least a good presentation. So here it is for you. So it's a lot easier to find notes or to find anything really if you know exactly what you're looking for. Notes is a big, diverse topic all by itself. So I strongly encourage everyone, instead of just, saying, where do I find notes, really think about it ahead of time and really put together a plan of what exactly it is you're looking for. So for example, you want to know where the notes that you are interested in buying are. You want to know your state, and sometimes you even want to break it down even more so by the city and county. Each state has their own different laws with regards to note investing and real estate investing. And sometimes actually different cities in the same state can even have their different laws. For example, the city of Chicago in Illinois has some different laws compared to other parts of even the state of Illinois. Also, do you want to just buy notes in the city that you live in? That's a lot of people start off that way. It's not always the best to confine yourself to that. But if you know ahead of time, that's the only place you're going to look, well, then that makes it a lot easier, actually. It's kind of tunnel vision, but it does make it easier to look exactly for just those specific parameters. Also want to think about, are you just looking for a performing notes? Performing notes are basically that someone is paying their mortgage payment at the same time every month. They can be excellent investments. Or are you looking for non-performing notes? Non-performing notes are basically someone that is at least 90 to 120 days late, where they are not current with their payments. Are you looking for first position notes that are secured by a first position note and mortgage? Or are you interested in a second position mortgage? They can be cheaper. That's a whole nother presentation, the differences between them, but you do want to know ahead of time as to which of those it is you're looking for. How about the fair market value of the house? You definitely want to know that. I've known note investors that kind of specialize in finding your lower price homes and notes and mortgages. And I've also known note investors that focus more so on your higher expensive notes and mortgages and homes. Either can be good, but they both have their advantages and disadvantages. But again, you want to know that ahead of time. And then lastly, even the type of financing, even the type of paperwork that is used by the notes and mortgages. Are you looking for an actual note and mortgage? Or are you looking for something called a contract for deed, also known many times as a land contract? They're both ways to sell a home. They both have some pluses and minuses, but they are a little bit different, and that could affect where it is and how it is you're trying to find those assets. So notes are a lot like money. A lot of people think, it must be easy to find that, you just turn around and you find all these, but it just doesn't work that way. I wish it did, but money just doesn't fall from heaven, and neither do notes. It takes work to actually make this a business and to be successful in note investing. You have to take action. You really do. There is no perfect magic solution that you just do this and you have more notes than you need. Basically, you want to cast a really wide net. So what I'm going to do first is kind of go over some places that you might want to target and some pluses and minuses to each of them. And then I'm going to talk about how you might actually go about targeting them. So to do this, like I just said, it's not a piece of cake. It does take work. You need to put together a plan. You need to come up with some desire, persistence, knowledge, time, and effort. And sometimes, but not all the time, you do need some money. So banks, lo and behold, that is a place to buy notes and mortgages from. Banks sell these in order to free up capital. You can get a list of banks from something called Lane Guide. It sells for about $150 per year. It's less common for banks to sell performing notes, but it does in fact happen. It's more likely that a bank is going to sell their non-performing notes. Why? Well, because there are federal regulations, and banks sometimes they can only keep so much bad debt on their books. A bad debt would be a non-performing note. So if they have too much of that on their books, then that limits the amount of other loans and other business that they can do. So a bank is more likely to sell their non-performing notes. And just in general, it's very unlikely that, Bank of America or Wells Fargo is going to sell to a smaller company like myself or even Melanie's. However, we might have some more luck and more success by approaching either small to mid-size banks or possibly even credit unions. The advantages to buying a note and mortgage from banks: they are very likely to have good, solid paperwork. They probably do this an awful lot. I'm sure most of their paperwork is reviewed and drawn up by attorneys. They are very, very likely to have good record keeping. They are very, very likely to be Dodd-Frank compliant. And I put a question mark for this because if you've been doing this for a while, if you've been around the sun a few times, you might remember back 2006, 2007, 2008, when banks and a whole great number of businesses, well, they got a little bit lax in terms of their underwriting. However, things have changed a lot since then. They changed some laws and legislation to limit that. And so very likely buying from a bank, you would buy a loan that has good underwriting that helps to secure that mortgage. Disadvantage to trying to buy from banks is it can be hard to reach someone to actually make deals there. You really have to reach the quote unquote decision maker. And that can take a lot of time and a lot of effort to get to that point. We're going to talk a little bit about that later on. I just mentioned something called Dodd-Frank. Just a short recap about this. This is something that you can really make a whole nother presentation about. Dodd-Frank is some financial legislation that took place. It took effect in 2014. And generally speaking, a note is worth less if it lacks this. There's some question as to how legally enforceable it can be. And a loan must be Dodd-Frank compliant if it's created after January the 10th, 2014, and the borrower is living in the property. However, there are some exceptions. Again, this presentation tonight is focusing on how to find notes, but I did not want to completely forget or skip that part of it. Another source where you can buy notes would be from hedge funds. Hedge funds often have inventory and are looking to sell their notes. How a lot of them work, maybe not all of them, but many times they'll buy a house, they will sell it via seller financing and then sell the note. Oftentimes, they are more likely to use either a land contract or a contract for deed that I mentioned earlier. Some caution with that. Some of them can be unscrupulous, and some of them may not screen the borrowers well. And sometimes the home itself may be in disrepair. Yes, if you haven't noticed, I did learn some of this myself firsthand. Landlords can be another source to buy notes and mortgages from. So I've made presentation to landlord groups about this, and selling homes with seller financing a lot of times can be the professional landlord way to have a pension or to secure their retirement. So they might sell their home with seller financing, but then eventually decide that they would prefer having some cash up front. So they will often do this less than 3 times in a 12-month period. The reason that's important, I mentioned the Dodd-Frank legislation. If they do that less than 3 times in a 12-month period, they qualify under an exception for that law. Again, if the borrower does not live in the property, then a commercial transaction is not subject to Dodd-Frank. So perhaps the landlord actually kept the home as a rental, but then they sold it to another investor with seller financing. If that was the case, then that becomes a commercial transaction, and it's not subject to Dodd-Frank legislation or regulations. If the borrower is a tenant buyer, again, it's also not a problem as long as the seller does not originate more than 3 of those seller finance notes in a 12-month period. And yes, from John Heyer, I have learned it doesn't really matter if you just create a different company. The IRS could come back on you just the same, and it's not a good idea to do that. Buying from landlords, it can be a good source of repeat business. If you have a landlord that's in the process of doing this over a number of years, and he's happy with the services you provided, it could be a really good source of repeat business for a note buyer. However, it can be harder to get a great deal. A lot of these landlords, quite understandably, they've put a lot of work in over the years, and they're not going to sell their homes or the financing behind them. They're not going to sell it for peanuts. Other real estate investors can also be a good source to buy notes and mortgages, especially home flippers or wholesalers. They might also sell homes via seller financing. And then the real estate investor, for whatever reason, maybe their business hit a dry spell, or they are people too. Maybe they want to go on vacation. Maybe they have a child, has college bills, whatever. Then they decide they have a need for cash up front. So they typically might sell some of their notes and mortgages that they generated. I would encourage you a little caution with this, that they might do this more than 3 times in a 12-month period. And again, if they do, watch those Dodd-Frank regulations. If the borrower is a tenant buyer under Dodd-Frank, then the note should have a seal of approval from a registered mortgage loan originator, also known as an RMLO. They would not be able to sell with a balloon, although just recently I've heard that's not always the case. This isn't what I do professionally, so I would encourage you to maybe talk with an attorney that's licensed in the state where the asset is. And you also have to confirm that the borrower has the ability to repay. Again, if you get in the right situation with another real estate professional, this can be a great source of repeat business. But same caveat, as I said, when I was talking about buying a note and mortgage from a landlord, it can be harder to get a great deal. A lot of real estate investors are very, very smart business people, and it's a matter of negotiation, just like a lot of other things in life. Other note investors, like this handsome guy, you might be able to buy notes and mortgages from them. You want to get as much information as you can if that's the case. And just, it doesn't have to be, you're not giving them the nth degree, the nth interrogation. Just find out, why are they selling? Are they just flipping the note? And if they are, that's okay. As if you're happy with the deal that you're getting, it shouldn't really matter to you all that much if the person you're buying it from is actually making deal on it or not. But just so as part of your due diligence, you just want to try to find out as much as you can. Did this person buy it as a non-performing note, and did they get it re-performing? If that is the case, what exactly transpired there? You're not asking to be nosy. You want to make sure if you're buying a note as a performing note, and they bought it as a non-performer, what exactly happened there that they are now performing? You just want to make sure you don't buy something at a performing note price, and then a month later they're not paying you, and you're wondering, what the heck happened. Just buying from regular people that have sold a home with seller carryback financing can be another source. These are people, they're probably not professionals, but maybe they owned a house and then for whatever reason they sold it with seller financing. You can almost think of these as your mom and pop note sellers. It can either be a performing note or a non-performing note. Similar to what I said, these are people that just realized they would rather have some cash up front. So these types of folks, they would very often qualify for a one-time exception selling a note and mortgage. That would be a one-time exception to Dodd-Frank legislation. Technically, they don't have to qualify borrowers, but if you are looking at buying that note as an investment, you very much want to know that if they did qualify them and what their job is. You want to maybe try to get any information that the note seller had when he or she sold the property to the borrower. They don't, again, technically have to use an RMLO, but again, that's kind of the gold seal of approval if they actually did. These types of folks, they can be hard to find and reach. We're going to talk about in just a little bit how you would go about it. And just some caution when you do your due diligence on these notes. Seller financing, like I said, these types of folks, they're probably not quote unquote professional real estate people. I've seen some very, I'll say interesting seller notes that people have tried to sell me. The goal is you just want to make sure if you do buy a note, really this goes for any note, you want to make sure you have a legally enforceable note. So these types of folks, as I said, they might or might not have done good underwriting when they developed the note, when they wrote it. If they did not have good underwriting, you might consider decreasing your price just a little bit. You want to watch the paperwork. There's more to being a responsible lender and a responsible note owner. You do want to make sure that you're keeping good track of your borrower's payments each month, probably on an amortization schedule. You want to make sure that you are sending that borrower their year-end summary paperwork for tax purposes. You need to maintain good record keeping. You need a really rock solid pay history. I've had people try to sell me a seller financed note where this was really, really poor. And I really had to greatly decrease my offer price to them because I had to be really sure. And I admit I was very, very cautious, and that really made me make a low offer. But for example, one of them, this note seller, he had absolutely no records whatsoever. And the note had been, I believe it was 4 to 5 years old. So I was a little bit worried if something ever happened, if the borrower stopped repaying and we had to go to court and a judge asked me, are you certain of this? Can you prove that, this was their pay history? If I bought this note and I had nothing for the first 4 or 5 years, then that was going to make me look really bad to that courtroom. And there was a chance then that he could just throw out the case. I didn't want to really be in that situation, so I did make a low offer on that. They didn't like that. I wasn't expecting them to, but again, I don't regret that too badly because, again, the note just had really poor pay. They said the pay history was good, but they couldn't prove it, and they had very poor record keeping that would prove it. Who typically holds these types of notes would be your, many times they are older folks, not all the time though. A lot of them are in either assisted living or retirement communities, or they're trying to get into them. Sometimes also developers or contractors or home builders might carry back this type of note. Also, mobile home park owners, they might likely to be a lower price note and mortgage, but they might have that also, as well as bail bondsmen. You might also consider, this might add an extra few steps, but to find notes and mortgages, you might target people that are trying to sell homes for sale by owner. In that instance, they might be willing to consider selling their home with seller financing. So if that's the case, you would want to educate them on the benefits of seller financing and then try to help them create a high quality seller finance note. In that instance, it would be best to season the note, though not 100% necessary. If that was the case, then you could just buy that note from them yourself, or you could even help them to sell it. I said likely must be Dodd-Frank compliant. That again depends on how often they've done this. If this is the very first time they've done it and they're unlikely to do it again, then you probably don't have to worry about it. So why would someone want to sell with seller finance? Well, there's a lot of advantages to it, actually. Sometimes it can make a sale go more quickly. This is very dependent on the real estate marketplace. Right now, homes are selling very quickly and for very high values. But if you've been around a little bit, you know this is not always the case. And there was a time when it was really, really, really hard to sell a house. So it kind of, the cycle moves up and down. And this is, like I said, that depends on the current marketplace. But it can also, selling a house with seller financing, it can set it apart and really increase the market. There are some people that could be really good borrowers. They have a good job, but maybe for whatever reason, it doesn't always appear that way, or maybe they are self-employed and it doesn't always appear that way if they are going to apply to a bank. There can be tax benefits to selling a home with seller finance. You might not have to pay all the tax bill all at once if you're only getting that tax bill, you're only getting that money that you're getting from the sale of the house spread out over time. A lot of times if you do this, then it can be easier to sell a note. And many times you can sell a house with seller financing at a premium. You can sell it for more than you would have gotten if you just sold it for cash, the quote unquote normal way. And you can also end up with a very high rate of return cash flow. Another option that sometimes people will do is they will make their own notes.
We did this. So this was my first time I did a
Yep.
note. I made my own note because we found a good deal, a house with a really good deal. So it makes sense when you have that.
Yeah, perfect. So guys, Melanie and I did not plan this out, but that, like I just got on my very first line there, you want to find a good deal on a house and then you can sell it with seller financing as an exit strategy. You get all those advantages I just talked about in the previous slide. You can often sell it for a premium price. You might or might not need to be Dodd-Frank compliant. Again, if you fall under one of those exceptions, I do caution people to be wary with your state laws. Again, state laws vary from state to state. For example, some states have a maximum interest rate, and you don't want to exceed that. You might be okay, but again, if something went wrong and you did find yourself in court, if someone was delinquent on their note, for example, you don't want to be standing there and have the judge look at you and said, you realize you're in out of state, you're not in accordance with state law by charging 9% interest, since the Michigan, for example, I do not know this. I do know this in Ohio, I should say that. You don't want to be in a courtroom in Ohio. The usual normal in Ohio is 8%. So you don't want to be in an Ohio courtroom and have the mortgage be at 9%. That right there could be a stroke against you. So how to write a good note? You definitely want to get as high of a down payment as you can, at least 10% preferred. 15 or 20 or even more is even better. You want to make sure you underwrite the borrower. Ideally, you want a credit score of at least 620. Obviously, the higher, the better. Stable employment is definitely a plus. The term, the shorter, the better. Under most circumstances, the note will be worth more if it has a shorter term. And again, interest rate, the higher, the better, though you do have to watch your state maximums. One of my friends and mentors, Dan Zitofsky, uses a slight variation of this, very similar to what I just did, but he'll add a couple of steps. So he will find a house that he can buy on a good deal. Then he will actually rent it out. Basically, not always at first, but he will eventually hire a management company. And now you have basically a turnkey rental that you can sell with seller financing to someone else. Since the borrower is not living in the house, again, the person living in the house is a rental tenant. So that's different. Since the borrower is not living in the house, you can sell it as part of a transaction, a commercial transaction, and it does not have to be Dodd-Frank compliant. So it's very lucrative how he has that worked out. So what the perfect note, I kind of told you what would be a good note, a quote unquote perfect note. That was described to me by a bank called First National Acceptance Corporation. They're actually based in Michigan. Yep. Would be a 10-10-10 note. At least 10% down, a 10% interest rate, and a 10-year term. Now, again, there might be state laws, or it might just even be a matter of negotiation. I would say it's not common that you would get all three of these in a note, but you can try to get as close to it as you can. So for example, I just said in Ohio, the maximum interest rate under most circumstances is 8%. So that's not quite the 10% that I've got listed here, but if you can get 8%, it's a heck of a lot better than if you sell a house at 1%. For example, or your 10% down payment. Maybe if I have my 8% interest rate, I can offset that by getting even just a little bit higher of a down payment. Maybe instead of only having 10% down, I can get them to put 15% down. So you see what I mean? I'm trying to get as close as I can to this quote unquote perfect note. And again, a lot of this is open to negotiation. 10-year term for a lot of borrowers can be pretty short. You might have to stretch that out to either 15 or 20, or it might even be your typical 30-year, 360-month term. That's okay. Again, the closer you can get to the shorter term, generally the better.
So I have to say, Bill, that speaks to really knowing how to use a financial calculator. And if you don't know how to use a financial calculator, it really puts you behind the 8 ball when you're dealing with notes, because all of that can be changed and adapted. And a lot of times it's based off of how much the borrower can afford. Yep. And once you calculate the taxes and insurance, and then you get a payment, the full payment has to still, be realistic for the person in the house. So, but I like that. And you want to speak briefly about FNAC? Just like who they are. I know we've, connected with them, but maybe you could share a little bit about them.
Yes, absolutely. So FNAC, again, that stands for First National Acceptance Corporation. They are a bank up in Michigan, and they buy an awful lot of mortgages. So I know other note investors, that's a big part of what they do typically, is they do their own marketing. They will find some notes. Very often they would be the type of seller carryback notes that I talked about a couple slides ago. And they find someone that's willing to sell their note, and they will contact FNAC. FNAC says, we will pay you X amount for this note. And they might add on, I don't know, a few $1,000s, whatever they're looking to make on it, 5,000, whatever they can negotiate really with the note seller. And then they will go back to the note seller and say, this is the offer that we can make for you. So they basically become like a middleman, and then FNAC ends up just basically buying the note. And that's a way that you can make money in this business and note investing without really any capital of your own. You could almost think of it as wholesaling the note, but right there that FNAC is willing to buy it from you. Now, again, it can be a matter of negotiation then, and you're obviously not going to offer the note seller exactly what FNAC offered you. You're going to offer them a little bit less, and then whatever's in the middle there is what you can collect yourself. So they're a good company to work with. I've had the pleasure to meet several of them at different professional conferences and things like that. I've worked with them myself. Good company. So there can be, you can also buy notes and mortgages from other professionals, and you can get referrals from other professionals. For example, attorneys. I listed a couple on here, divorce attorneys. Maybe there's a couple that unfortunately they are getting divorced, and maybe they own some notes and they have to sell them as part of their divorce proceedings. Or probate attorneys deal with people after they pass away. Maybe if someone passed away and they owned some notes, then it passes to the heirs, and maybe it needs to be sold so that the proceeds can be split among different heirs. Obviously, real estate attorneys do this type of thing all the time. They help people set up notes and that type of thing. Also, CPAs or financial planners. As I mentioned earlier, there could be good reasons why you might want to sell a house with seller financing. So a financial planner might have encouraged someone to do that, in which case then they might know, hey, this person has a note, and yes, they might want to sell their note. Mortgage brokers, obviously, they are in the business of putting together notes. Realtors, they might be aware of anyone that did sell a house with seller financing. Title companies, obviously, same thing. Good ways to reach these folks would be either direct mail or networking. Again, I'm going to talk about that in just a few slides here. There are also online exchanges that sell notes. I have a number listed right here. I'll pause right here for just a few seconds so people can take a screenshot of this. These can be good places, especially for beginners, to find notes. I do use some caution. These may not be the very best note deals that you can find. Some of these websites, they are essentially middlemen. So if you do buy a note or look at notes from this, make sure you do your own due diligence. Just the very fact that it is listed on a website does not mean that everything is guaranteed about that note. Caveat emptor, instead, let the buyer beware. Make sure you check that collateral file, and just again, make sure that you go through everything with a fine-tooth comb. So those are some places that you might be able to buy some notes and mortgages from. Now I'm going to talk a little bit about the best ways to reach these note sellers. So direct mail, that might cost some money, but it's probably the best means for a mom and pop note seller. There's LinkedIn. That can be a very good way to do some note marketing and networking for free. It does take some time and organization, but it can be very good to reach professionals with banks and hedge funds. If you do direct mail, I've done it myself. You buy a list of note holders. It's usually 10 to 20 cents per name, depending on how many you buy. That's one of those, if you buy a great big huge list, they will usually give you more of a discount on the price per lead. Some places to buy these lists would be ListSource, Note Seller List, NoteDocs, and Experian, just as I have listed there. You can set your own parameters with regards to this. Do be careful if you're choosing assets in a war zone or a high crime area. Trulia is a good place to find information about crime in an area. Consider your own situation, your fair market value. I need to update that. I've increased my own minimum fair market value up to at least 60,000 actually, or the current unpaid balance. I've even learned a little bit since I put this together. But yes, I won't really mess with a note at lower than $5,000. That's I should probably increase that a little bit also, but it just gets to be too much of a hassle to do this if the balance is too low. Term of the note also, you might only want to buy long-term notes if you want to look at notes that you can sell a partial on or something, or some people are more comfortable and actually want the really low-term notes, again, because they're likely to get all their money back sooner. Do use some caution with mobile homes. They might be good investments if it is converted to actual real estate property. But if it's on wheels and it can just be wheeled away, then that can definitely change the value of your investment. If that's the case, you send either a letter or a postcard. You're trying to basically get them to respond to you. It helps, but it's not necessary to have, your company information and logo or something like that. The big thing is, again, getting them your contact information, getting the message across to you that you are looking to pay cash for that mortgage. And again, your number one goal is to get them to call you. I mentioned this briefly. LinkedIn can be a great way to reach banks and hedge funds and attorneys. Upper income people in general tend to use this more. That doesn't mean that it's impossible otherwise, but I would say it's definitely used more so by your professional folks. Some keywords here to look at if you do use this approach would be distressed debt. I've got them listed here for you. Non-performing assets, special assets, secondary marketing, or foreclosures. And you can use the message function. I think if you want to do it a lot, you would have to upgrade. That might cost you a little bit of money. I think it's $100 or something like that. But if you're going to use a lot of that message function, that can be well worth it. Using other social media can be a great approach also. There's a number of Facebook note investing groups out there. I'm using Facebook myself less and less. It can be a very frustrating thing to go on these days. But if you just use it for business, it can be really, really useful. And again, it can be great to reach other real estate investors with Facebook. And just your general internet marketing, it's a really good idea to have your own website, but it only really helps you if people are actually using it. You can also use Google AdWords and Craigslist. Also, there's a lot to be said just for basic networking. Melanie and I were talking when before we started recording, just even getting involved in your RIA groups. As she mentioned, I actually run the note investing subgroup for Columbus and Cincinnati, Ohio RIA groups. So I'm known basically in those groups as one of the note investing guys there. So it's a good idea to get the word out and to meet people, have business cards, have brochures, that type of thing. That can be a really great way to meet other real estate investors and landlords and note investors there. Also, just networking with other professionals, like I said, servicers are companies that you could think of them. They basically do the administration for note owners. So you might imagine a lot of them might know if other note owners are actually looking to sell some notes. And some of them even have a place on their website where they might actually sell notes. Conventions. I know this for a fact. Melanie and I talked about it a few weeks ago. Going to conventions, specifically the IMN conference, that was a place where she attended and was able to buy some notes from. Loan originators and mortgage bankers, those are people in the mortgage business. They might know people that are actually looking to sell some notes. And then credit unions and title companies, as I had mentioned earlier in the presentation. So if you do go this route, it can be helpful to just smile and dial and try to get a hold of people personally. This can work with banks. I've done it myself. It is challenging. I don't want people watching this to think all I got to do is call the bank and first phone call, I'm going to get through to exactly who I need, and they're just going to sell me everything I want.
Right.
It might work. I mean, you might hit that, once in a million call, but generally speaking, it's very likely that it's going to take repeated phone calls and putting together a plan. And it can take a lot of time and effort to make the right connection. But if you do, you can hit it big. I know for a fact, a couple of my note investor friends down in Texas, and they did exactly this. And they ended up with the right guy, and they ended up buying, I believe it was a pool of 26 notes from a bank. And they made a lot of money on that deal. And my hat's off to them. I think that's fantastic. So the end note is you want to end up like Obi-Wan Kenobi, where you can say these are the notes that you are looking for. Again, hopefully I gave you some tips to help you get right to that point. And there is my contact information. And if anyone is watching this on recording or another time and had any further questions, I'm happy to always talk with folks about this. And Melanie, you tell me, how was that? Do you have any
Excellent.
questions, anything that you want to talk about after this presentation?
Yeah, I really liked, you just really gave a great big picture of note buying. I mean, people just want to get to that slide, the slide where all the sources are, and maybe you could pull that back pull that back to the, that the final slide here. And they usually just want that list of like, okay, I need this list of who I can contact or how I can reach them. However, honestly, knowing what your target is the key thing. So like, what are you targeting? Like, what states do you want to buy in? And I think that's really part of it. That one right there, you were there. So I have a few questions from you. Of this list here, and your other bigger lists.
You mean what I have on the screen now? Is this the one you were speaking?
Yeah, that's the one. They usually want this list, right? And
Uh-huh.
you can give them this, but they need to know, what are they looking for? Even if they were to go here,
Exactly.
what are they looking for? So I guess if you would have any advice, that like your top advice to new note investors, knowing what you've experienced and in your note buying kind of career and just this current environment, what would you suggest to a new note buyer?
Well, practice and action. Okay. It's very, very easy. I say this from firsthand experience. It's very easy to listen to presentations like I just made and say, that's really, really interesting. And then you close your computer, and then the next day, just go back to your job. And then a couple days later, you might see someone else making a presentation like I just made. And you say, wow, this is really interesting also. And maybe that they're speaking there about, I don't know, apartments or something even different than note investing. Either can be good, but just take action. So these websites here, if I'm a brand new note investor, I would at least go on there and see what they have for sale here, and just practice and look at different notes and what they are asking for those notes, and start to get a sense of what notes cost and what return I can make on that. And why is this note selling? Why are they asking this for this versus this other note? Why are they asking this? It's not always just a matter of a certain percentage of the unpaid balance, for example. There might be reasons why one note sells for something and why another note sells for something else. For example, if one note has a face value is written at an 8% interest rate, this could even be the exact same house, the exact same collateral, but one note on it is for 8%. And then if there was a way to do this, if there was another note on the same house, or maybe the house right next door, which has the exact same number of, bedrooms and bathrooms and square footage and such, if that note was, that house was sold at a 1% mortgage, there's going to be a big difference in the amount of discount that the one house would sell at, the one house that was listed at 1%. So it's a matter of just taking practice and really looking at different notes. Also, you want to think about, your team. For example, I live in Ohio. So I personally like to focus on notes that are in the Midwest here. Why? Because if needed, I could probably drive to them in one day, versus if I was looking at a house at a note in Arizona, and for whatever reason I needed to go there, well, I'm looking at a much greater time and hassle factor. Doesn't mean that I won't. I actually have owned houses in a number of other states, but from experience here, I like to be at least a little bit closer. And also, do you have, like I said, a team there? Do you know an attorney, for example, who is licensed in that state? Do you know other real estate investors in that state who can maybe go look at a note if needed? There are advantages to that. Some people, kind of poo-poo that, or say, it's really not necessary. And that's true. I mean, it's not always necessary, but Melanie, like we talked even a couple of weeks ago, you ended up, a friend of yours from up in Michigan ended up driving down to another note that you owned in another state.
Mhm.
That can be really, really helpful if you do have even someone local there that you can trust, or that
Right.
can put you in touch with different professionals there.
Right.
So
For me personally, I would just say some of the other specific things you mentioned that really was practical. As a new note buyer, I fully immersed myself into my local RIA group. It was the Ann Arbor Real Estate Investment Group.
Yep.
And that I remember showing up. I had some notes that I could bid on. I had already done the due diligence. I said, hey, I just want to share. I stood up and I just presented a few case studies of potential notes. And immediately people were like, I'll invest there. I want to learn more about this, and you're prepared because you're analyzing deals. So the more you analyze, and I would recommend people go right onto Paper Stack right now, because they have to set up a profile. And if they set up a profile, then they can be verified. And you go on and you can actually analyze deals and look at deals there. And they usually give you the collateral and other things that are available for you to look at. So again, the pricing is not like going directly to a bank or a hedge fund, but it might be a good place to get started. Or, like we did initially, we partnered with another note investor to learn sort of the ropes before we went ahead and, boarded our own notes with a servicer and ran our business. So these are all good recommendations.
And Melanie did exactly what I was just talking about. I mean, she took action. She got up to RIA and had a short presentation. Don't make it harder than it has to be. Keep it simple, but take action. Do something. Right. Even if you just get on here, even if you just listen to this and you don't do anything but get on Paper Stack or one of these other sites that I've got here, and you start looking and taking action, at least looking at them. Taking action and buying and selling obviously is the end result. But if I'm new, that's just a really good place that I can at least start for free.
Right. So Bill, again, why don't you put your final slide up with your contact information? We are recording this. We are in the throes of graduation. So we're recording this for our Monday night traditional night meetup group. And please contact Bill with any questions. Of course, you can also reach out to Phil and I at noteworthydeal@gmail.com, and we can answer your questions. But I'm really excited, Bill, because this is a nice topic and it was a nice overview of where to buy mortgage notes. Do you have any final thoughts, or, I guess personally, what are you diversifying outside of notes, or are you strictly notes, or what are you doing personally given the change in economic times at this point?
Yeah, that's a very good question that I'm similar to the two of you. I'm also diversifying into some other things as well.
Right.
I've realized that notes can be a really, really good investment, but just like anything else, they're not always perfect for everybody. And there's a lot of bonuses, for example, to actually owning actual physical real estate. So I'm learning right now actually more about landlording, and I'm going to try to add some rentals to my own portfolio over hopefully sometime in 2022, although I am also actively watching the market, and boy, who knows exactly what will happen here. It's a strange time in the economy and just in our country, just in general right now. Right. Inflation is pretty high. Interest rates are really starting to increase, and I've already heard things from some places that this is already starting to slow down the real estate market. So who knows? But yes, I am hoping to start to add some rental properties to my portfolio, and I'm also looking at self-storage opportunities myself. Excellent. I see a lot of opportunity in both of those, and there's just a lot to be said for actually owning physical assets in addition to paper assets like notes and mortgages. Exactly.
So if you're listening tonight and you haven't bought your first note, maybe you are a landlord. It's not too late to get started in learning about mortgage notes, where to find them, what your buy box is, what to watch out for, Dodd-Frank, and all the other innuendos of notes, because there's a lot of moving parts. But I will tell you, as a new note investor, I learned all of the real estate kind of ins and outs because of notes. So for me, it was a great place to start. So Bill, again, thank you so much for coming and speaking to our group. This is very good information. And please, I hope you other people reach out to you and contact you if they have any other questions.
My pleasure, Melanie. I really enjoyed it. Thank you very, very much for having me. And that's how you climb the hill.
All right. Thank you, Bill.